Alrighty, Alpha Hunters, welcome back. It is a wonderful bullish hump day Wednesday, and we are looking pretty good here on the markets. We did have a bit of a gap up here, about almost 0.5% of a gap up on the SPY to start the day. Nice little quick pullback for the first 30 minutes, and then that was it. After that, it was just kind of like bullish city. And yeah, we should have been buying the dip over the past couple days. We've been talking about it, and yeah, looking pretty good now. We'll look at the daily, what kind of levels we're at. Qs also had a nice gap up here on the Qs, up roughly 0.75% there on the open, sideways, bullish. There you go. I mean, that's kind of the way the Qs have been today. IWM also on that bullish train, currently up 1.36%. SPY's up 0.9%. Qs are up 1.7. So yeah, everything's rocking pretty good. See, IWM had about 0.2% gap up here, looking pretty nice there. Nice little quick pullback and run. The DIA, the weaker one out of these five, nice gap up here, but that was kind of a 0.25% gap up, a little bit more than that. But yeah, nice drop off there in the first 35 minutes, and nice run there for about an hour and a half. I guess that was about an hour and a half or so. Almost 2 hours, but then kind of sideways choppy. But yeah, I mean, we're just not doing it like the others. RSP, kind of a nice little gap up here, nice little pullback for 30 minutes, nice little push, currently up at the session highs. RSP, okay, kind of talked about that yesterday. You know, kind of setting up kind of bearish here with this gap down that we had yesterday. Gap up today kind of looks a little bit better, and that was one thing that we kind of, we kind of talked about yesterday, that you want to see that happen, that breakdown happen immediately. So I would say that's probably not going to happen now. Like if it would have gone a little bit sideways today, then maybe that would have got pushed down. But yeah, it looks a little bit better. It looks a little bit better. The DIA looks not too bad either. Nice little lower wick here, lower hammer coming in. Looks pretty good. Looks pretty good. Okay. IWM might be setting up maybe a longer basing pattern here. Okay. Very choppy one though. Looking pretty good here on the IWM. Been kind of like all over the place. Obviously, the two previous trading days it got hit pretty good. Monday had a nice gap up, sold off, and then Tuesday nice gap down, sold down a little bit. Bounced back a little bit today, so not looking too bad. And then you get to the Qs. Qs all-time highs. All-time highs. Man, look at that. Nice gap up. Sold off. Very cool. It didn't even really sell off. This wick is... Yeah, I mean, we didn't even sell off, really. So, daily wick, I don't know why those get posted like that, but it is what it is. But yeah, you're probably just going to continue to ride this for now. SPY also hitting daily highs, all-time highs right now. Okay, so yeah, SPY Q is looking pretty good, and probably don't need to worry about selling or anything like that, or reducing exposure. I think, you know, if you're buying the dip here late last week, you're probably just gonna let it ride, see what maybe tomorrow, possibly Friday, can look like. But if we start to slow down here, kind of just trail off, kind of flatten out, maybe you can talk about reducing exposure. But for now, looks pretty good. VIX dropping off. Markets at all-time highs. Makes sense. DXY, a little bit of a bounce back today. I wouldn't be too sold on trying to buy that for now. I mean, to me, The DXY is probably just in a bearish move here. We really need to see the DXY take these two highs. Like if that doesn't happen, I probably have no interest in the look to be bullish on the DXY. GLD gold. All right, so dollars up and gold's also up. That's 2 days in a row they've kind of gone in the similar directions, I guess. All right, interesting. So yesterday it was looking like we were going to break down, but I know it's definitely better to look at the futures. Futures look a little bit more bullish than the GLD does. So maybe we do see gold and continue to trade higher. Yields, this is 5 days in a row. Trading days in a row. Yields have dropped. That is interesting. Okay. Let me look weekly. How does it look on a weekly? Yeah, so for now, like this uptrend's kind of broken, obviously, and I mean you just kind of don't really know really right now on yields. I mean, it could be in the part of setting up a sideways pattern. If it's on its way all the way down to back down to the 4% level, then that's not a bad way to probably look to play this. I would look for at least maybe like a day or two retest higher, and then maybe look to play that if that's a goal in mind on a trade like it. Obviously, you're looking at bonds, but yeah, as far as that goes, I mean, we could just be sitting up sideways. 10 and 2 inversion, not really doing a whole lot today. And speaking of, I'm gonna go take a look at the shorter term. 2 years dropping off, but 2-year hasn't broken this low from mid-May. Okay. And then what about the 30-year? So even the 30-year is breaking its uptrending channel. So yeah, I mean, we just might be in much more of a yields and don't do anything for a while kind of time period. Okay. HYG, I have no reason why the bond shouldn't probably go higher over the medium term. Yeah, and that's about all I got on bonds. HYG doesn't look too bad. LQD looking for the breakout. So we probably will see, yields probably have a little bit of a rally on yields, but that means bonds would pull back. You're probably going to be looking to be bullish on the bonds on the pullback, especially now that we've clearing this high from mid-May on the LQD. TLT was clearing that high yesterday, continuing higher today. So yeah, I'd be looking for the pullback there on the TLT. All right, sector performance. We got tech. Yeah, I mean, just and then just kind of eyeballing most of these other sectors. I mean, just tech is just the one that's kind of got definitely an uptrend to it throughout the day. Most of everything else, I mean, we had a little bit of an uptrend in that second hour of the day, but other than that, most of everything else just kind of sideways. Just tech was a little bit bullish, kind of sideways there in the beginning, and then a steady bullishness throughout the day. And that's really kind of what's been driving the market higher. Tech. Okay. Industrials, communications underperforming, as well as discretionaries and tech or healthcare, and materials, financials, energies, real estate, utilities, and staples at the lower end of the day. If we take out the gap, what do we got? Tech, yep. Tech doing pretty good during the day. Taking out the gap. Discretionary slightly outperforming. Healthcare underperforming. And then industrials, real estate, materials, communications underperforming. Utilities, financials, energies, and staples at the lower end of the day. All right. Okay. Another thing, I know we've kind of been keeping an eye on this one. IYT, the transportation ETF, although the transportation ETF that I track here. There's several of them. What's really kind of interesting about this spot right now is it is coming right into this kind of previous support level. We kind of bounced here before, previously broke it a little bit back in January and kind of got back above it. But this time, since we noticed the transport's really kind of been not performing well, especially in the second half of May there, we bounced off that level again, which is that price level is around 64, so 64 here, and then but basically that's where we've gotten back to here the past 4 days, and we have not gotten back over it. And we saw what the Qs are doing, we saw what the SPY is doing, but the IYT in transportation not continuing higher, just kind of smacking its head. So wouldn't be surprised if we see maybe a little bit of a pop and then a drop off, or maybe it just drops off here soon. So that's just kind of what I'm thinking. But yeah, we've seen definitely a pretty good amount of weakness coming out of transportation sectors over the past 2 months, which is not typically a good thing.